The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Well, good afternoon, everybody. It is EG Tax, not Esther Gulius, but it is Chris Fabian in studio, again from EG Tax, here to help you this hour with whatever tax questions you may have. And I'm in studio today with my beautiful wife, Tiffany.
Hey there. Happy Saturday. Yeah, Esther's hanging out in a warmer place today on vacation. So
Yes, with howler monkeys and sloths, and everybody can guess where she is.
And oceans and sun, although it's the rainy season there. We talked to her before the show. She's having a great time. Yesterday she went four-wheeling. The day before she went fishing, and they caught some marlin. I think you have to release them back, don't you?
Yep.
Because you're not allowed to keep the marlin. But they ate tuna for dinner. They did keep the tuna, and she's having a really, really good time. And just want to say that we pushed back school a week, not because we weren't getting registrants, but because, I don't know, with the holidays, it just worked if we pushed it back. So there's still time to register for our tax school. And it starts in a week, and it meets twice a week, either in the mornings or evenings, whatever is more convenient for you. There's also an online version. We teach you taxes from A to Z, and the hope is that you'll work at one of our 30 offices, and that's really our hope. It's a lot of fun. You get to help people, and you get to be a blessing to people. So above all, that's why. If you're interested, go to our website at egtax.com or call, and we'll get you a registration form.
Right, and our number at the office is 632-7886. But here in studio, it's 803-0930, 803-0930, star 930 on your cell phone. For those people out of the area, 1-800-616-9236. Or you can text in your questions at 3930, 3930. And, sorry, reading that 800 number, it used to be you needed 800 numbers if you were long distance, because it was a toll-free number. Nowadays, your long distance is built right in, and there's no extra cost. So I'm surprised 800 numbers are still around. Mm-hmm.
Yeah.
But
I just wanted to say, don't forget, extension deadline is this week. So if you filed an extension, make sure you get your stuff done by October 15th. And so we are all on board. Let's see, at our office, there's Tim, Liz, Maria, me, Chris. There's like 6 preparers working 9 to 5, and we're there to help you get your extensions done.
Yep, and you can fax us your stuff, email us your information. We could get it done that way too. We are there for you. But today we're going to talk a little about HSAs, a little bit about what the difference between New York and the IRS, because they're not the same, and we're still getting used to that. So if you have any questions, give us a call. Doesn't have to be on our topics, but Ed will help you no matter what, because that's what we do. And, another thing we're doing, or Tim, with EG Health Connect, is every Wednesday at 5:30 p.m. and Saturday at 1 p.m. is having a Connect with Medicare seminar for those people who just turning 65 or who are over 65 and have questions, concerns. He's having a free seminar, and you can go listen to what he says and can ask him questions. And he loves doing it because it's just like doing taxes. It's helping people, and that's what we like to do.
You want to take the caller on line 1 because it ties in with the extensions,
okay.
I think.
We'll go to Dave. Hey, Dave.
Hello. Chris, thank you very much. I always enjoy the show with Esther. I always learn a lot. My question, sir, is that for a self-employed person, do you have anybody in your offices that has a particular expertise, amongst other areas, of converting that self-employed person from a sole proprietorship to a LLC, the limited liability designation?
Well, yeah, there's myself, Maria, Tim, Tiffany. Anybody at our corporate office would be able to help you with that. The hardest part about it is making sure all the paperwork's in with the state of New York. We do work with a lawyer who can help with that. And then there's the lovely advertising you have to do. But that's something anybody at our office would be able to help you with.
And a good for anybody listening, a good reason to become a LLC is because then you have that protection. And so probably, Dave, is that why you're thinking of incorporating, why you're thinking of going to LLC?
Yes, it is not for, yes, so that's the exact reason, actually. It's not for myself, but it's for a relative who right now is working, and I'm just doing the groundwork. But I have the impression, Chris, you mentioned a lawyer is necessary in this. Can it be quite complex, or is it pretty much standard boiler?
It's pretty much standard boiler. I mean, we use biz filings for doing corporations, and Maria goes directly to the state of New York Department of State for incorporating. But with LLCs, there's a little bit tricky stuff in there, and you want to make sure it's done right, because especially with today's Sue Happy society, you don't want to think you're protected and then all of a sudden they say, oh wait, you didn't dot that one I in paragraph 3 of page 200, you know?
Yeah, and another option is, instead of becoming an LLC, you could also get that protection by becoming an S Corp or a C Corp. Has he or she thought of that, Dave?
No, she has not.
Yeah, so I mean, I would have her come in and sit down with one of us, and we can go over all the options to see what's best for them.
I know, just quickly, becoming an S Corp is cheaper than becoming an LLC because, Chris, step on me if I'm wrong, but an LLC, you have to do advertising. You have to advertise your business. And how much does that cost, Chris?
It could be anywhere from $800 to $2,000.
Whereas an S Corp or a C Corp, you don't have to do that advertising. And so lots of businesses do the same protection by becoming a C Corp and then converting to an S Corp. I know that's what a lot of our businesses do.
Right. And the advertising isn't the typical, hey, we got a 20% off sale, use us for snow plowing. It's Jane Smith formed DDD LLC. You know, it's those legal notifications in the papers.
I see. And Chris, are you and Tiffany at a particular office, or shall I?
We are at our corporate office at 1890 Colvin Boulevard in Tonawanda.
Okay.
We're there Monday through Friday, 9 to 5.
Okay, very fine. Chris and Tiffany, thank you very much. I appreciate it.
You're welcome. Thanks for listening.
Nice weather.
And yeah, you know, and that's what we love to do. We love to help people, you know, with whatever it may be. And there's no charge for consultations. And I can't believe how many people are surprised, even after we say it and they come in and they're like, wow, there really isn't a charge.
I know with our logistics, Sue Happy society, it's always important to do those, you know, things and covering your butt. Sometimes we also say, if you don't want to incorporate, at least getting insurance.
Yeah, making sure you have the right insurance.
The right insurance is a really good idea.
But call us before you do anything, because most of the time after you do something, it's too late.
Yeah.
But
after the break, you want to talk to Bob and Carol?
Yep, we'll talk to Bob and Carol and do our discussions, and we'll see you guys in about 2 minutes. Well, hello, everybody, again. It's Chris Fabian and Tiffany Fabian from EG Tax here this sunny Saturday to help you.
I know our daughter went to the Clarence Pumpkin Farm, and what a great day to go to the pumpkin farm.
It is.
Hey?
It is. It's not raining. Hopefully the rain holds off. You know, we could dry out a little. But I did get to cut the lawn today. If you have tax questions, 803-0930, star 930 on your cell phone, 1-800-616-9236 if you're out of the listening area, and 3930 to text in your questions. We do answer those too. And we're going to go to Bob, who's been patiently waiting. Hey, Bob, how can we help you?
I've got a couple of questions for you. One of them, when I went to my mailbox today, New York State sent me a property tax relief check. I believe that does go on my tax forms, doesn't it?
Good question, and congratulations in getting that check, I would say. What you do is it's tucked away under your itemized deduction, where you write off your property taxes. And so under the Schedule A, you subtract off that property tax relief off of your potential allowable property taxes. However, with the new Trump reform, your standard deduction is so large that not many people are itemizing on the federal. However, a lot of my single people still itemized on the federal. But if you itemize on the state, you have to do that same nuance. You have to subtract the allowable property taxes. You have to subtract that check from your allowable property tax deduction. So it's not that it goes on your return. It reduces how much you can take of property taxes on the itemized deduction. Does that make sense?
Yes.
Okay.
The other question has to do with the STAR exemption. I believe about a year or so ago, I read something that said that if you sign up to get a check from New York State, rather than get the deduction on your school tax bill, then you would get more money, or you could get more money. If you left it just as a deduction on your school tax bill, then it would never go up. Are you familiar with this?
Yeah, that's, I think it's their ploy to try to issue checks to people, because the key word is it may increase, and it doesn't state what the criteria is for it to increase. They just say your check may increase every year.
Right. I just wondered what the pluses and minuses were. When I got my tax bill, it does say, let's see, this year's STAR exemption benefit cannot exceed last year's benefit. Now, the way it was worded, I actually went to the town assessor and talked to her, and she said I was the first person that came in, and nobody had signed up to get the check rather than the exemption on the tax bill. And in the back of my mind, I just thought, it's got to cost them more money to print a check and send it than it would just to put the deduction on the bill. And I was wondering, there's got to be a catch here. And I just wondered if you know what that catch is.
Yeah, no, I'm thinking that they hold, like, people, your mortgage companies pay the property taxes in early end of September instead of waiting to the end with the people with the escrows. So now they get less money in September, where if they're holding the checks, like your check you may have just got was the bonus check, which is the last year for the bonus check with the school tax increases, if they within the 2% increase, if they met their budget. The real STAR checks, they may hold on to the end of October, beginning of November. I'm not sure yet. So they're probably getting more interest, is my guess, is why New York State's doing it that way. Okay,
well, I figured it was a benefit to New York State. I just couldn't figure out
why.
What?
Yeah, the state never really does anything to help most people.
New York State
lining their pockets
for my benefit, and so that was my question. I still haven't signed up for it. I didn't know whether I'd come further ahead or
right,
because the way it was worded that you may get more money.
Yep. Again, the key word is may, and so what's the criteria? They don't know. I mean, I called New York State. Tim has called New York State, and they are very vague in their answers, and they don't want to say much of anything.
What would you do, Chris, if it was you?
I would get the reduction, because I don't want New York State holding on to any of my money.
Mm-hmm.
Yeah, well, they did say that there was no guarantee that you would get the check before the tax bill was.
Yep.
Which for me is not a problem, but I just knew there had to be a catch there someplace.
Mm-hmm.
Right.
Was hoping that you could tell me what it was. But
yeah, no, we've been trying.
If we find out, we'll let you know.
Okay. Well,
Thanks, Bob. You know, and
You go first.
one other thing for those seniors who signed up for the Enhanced Star, if you did the election into the income verification, you don't have to go every year to your town to register for the Enhanced Star. They just go off of your tax return. So if for some, you know, you go, oh, I don't have to file anymore, and you stop filing your return, your Enhanced Star is going to stop. So you got to be careful with what you do with that.
And then break down what Bob just said there, would you? When he was calling in about reduction in your property taxes or getting the check.
Right. New York State, you know, we all heard of the STAR program where it's always like if your school tax is $2,000 and they'll back off $300 for a STAR savings because you registered with the state of New York. So then you only pay $1,700 in property taxes. Now New York State's saying, do you want to pay the full $2,000? And we'll send you a check back for the $300, and it may go up every year. It may not. Or do you want to keep your reduction of your school tax so you only pay less $300 every year? So they're giving you the option for some people. Once your income's over $250, then they start taking that option away.
Gotcha.
So you got to be careful with that. And 803-0930, 803-0930, star 930 on your cell phone. And we're going to go to Carol, who's in North Carolina. Hey, Carol.
Hi, how are you?
Good.
How are you?
Okay, good. My question is, I turned 62 this year, and I was wondering if it's a good idea to take my Social Security early, and I'm still working part-time, and they told me I could only make $1,400 a month. Is that true? Otherwise, I have to pay taxes on it?
Well, no, you don't pay tax on it. What it is, let me just do math real fast.
So until you reach full retirement age, which is 66,
and some odd months,
you have a limit on how much you can make, and so you're not at full retirement age. So that's true what they said. Now, Chris wants to chime in after you did some math.
Right. So about 16.8 is the income limit where, say you make $17,000, you're over that 16.8 by $200, you would have to pay back Social Security $1 for every $2 you're over. So if you're at 17,000, you would have to pay back $100 to Social Security because you went over that 16.8. So it's all going to be, Carol, how much money are you going to make working part-time?
Do you know?
No, because I work different hours at different times. I thought I was making like $800 a month, but they said gross, so I'm thinking it's more. And they said it's just this first year because I just turned 62 in June. So if I start taking my Social Security just for the first year till the end, till January, I can only make $1,400 a month.
Right. No, that's for the whole. That's till you reach 66.
Oh, and then they told me after the first year, then it's whatever you just said, 17.
Yeah, no, it's they give you the first year you turn your wages up until you start collecting Social Security don't really count. They give you more of a cushion, like up to $45,000. But after that, once you're done working, they look at that 16.8 figure and they say, okay, you're over, you got to pay back, or if you're under, you're good.
Yeah, and so again, it is 16.8 right now. If you start collecting Social Security, you can make up to 16.8 a year in wages. If you make over that, you have to pay back $1 for every $2 you're over. And it sounds like, from what she was saying, it sounds like she would be under the 16.8 a year.
It sounds like you would be fine.
Okay, but also they told me if my husband and I together make over $32,000, I have to pay tax. See, the first one was an income limit to repay back Social Security. What you're talking now is the taxability of Social. They're two different apples and oranges. So this one, we'll call it the orange, is if you take yours and your husband's income plus half of your Social Security. If that's over $32,000, then
part of your Social Security counts as income on your tax return.
So then I'm going to have to pay that back?
No, you don't pay it back. It would go as income, like your wages on your tax return. So say you make $12,000 in Social Security, okay? And we'll say 1,000 of it counts as income on your tax return. We take that 1,000, add it to your wages, your interest, and it all goes into your total, your AGI on your tax return to figure out your tax liability. So if you had $1,000 of taxable Social Security, you're in the 12% bracket, that your $12,000 of Social Security only made you pay tax of $120. So it's not going to kill you on your tax return.
And then going back to your original question, should you collect now or later? On our website, there is a calculator at egtax.com, and you can calculate how many years it would take to recoup waiting. Generally, we're a proponent of collecting your Social Security sooner than later. But you could also give us a call during the week at 632-7886, and we can run the numbers for you. By running the numbers, as we'll tell you how many years, Carol, it would take to recoup by waiting to collect on your Social Security.
Okay. So
Okay.
I'm thinking it's better to take it now.
Yep. We'll talk more about this after the break.
Usually,
Just keep
yes.
listening. We have to break for the hard news right now. This is Chris Fabian and Tiffany Fabian from EG Tax. We'll catch you on the other side of the news.
Oh, don't sing. Don't.
Yeah, I won't curse everybody with the Fabian voice.
There's a text before we get to the calls. It says, would you recommend a consultation for somebody who is 54, who became disabled and is going through the Medicaid process later to apply for SSDI with some assets and a house that is paid for?
Well, good news.
And I wonder if they're married.
Right. Medicaid doesn't look at assets anymore. I mean, that's unbelievable, at least for health insurance purposes. And I think for regular Medicaid purposes, too, they do not look at assets because we were told you can have $5 million in a bank and still get Medicaid.
Right.
So I would, if you became disabled, I would start collecting your Social Security.
Yeah. Absolutely.
You know, and going back to Carol, who just called.
Can I just touch on this also before we go back to Carol? Also, if this person is a single person and they're just going to collect Social Security disability, that income is not taxable unless if you're single, your other income is greater than about $11,000 a year. So that Social Security.
So you would have to add up your other income plus that,
So
and if it's over $25,000.
It shouldn't be taxable. Now, they also talk about other assets, and so I'm wondering what are those other assets? And if they sell their house, they don't have to worry about reporting it unless the gain for a single person is more than $250,000, or for a married person, it's greater than $500,000. But I don't know about the other assets.
Right. If you want to call us on Monday, we could go over this with you at 632-7886. We'll go over everything and figure out the best course of action for you. If you have questions in the final half an hour, 803-0930, 803-0930, star 930 on your cell phone. Keep texting in at 3930, and we'll answer those questions too.
And then you were saying something about Carol. Sorry.
Yep. With Carol, people look at, I get 8%. I get 8% if I keep waiting and I keep waiting and I keep waiting, which is a tremendous growth. And, that's unbelievable. They're going to give you 8%. But until you start collecting, that's monopoly money. Yeah. It's money you could have had in your pocket that you never did. And so by waiting 4 years, there's people out there who give up anywhere from $80,000 to $120,000 for those 4 years, and it's normally about 82 years old to catch up. And by the time you're that old, you're more worried about it's going to go to a nursing home or an assisted living facility. So who actually won with that? Not you, but the facility. And I know there's a lawyer who met with one of my financial brokers clients who said 90 to 95% of the time Social Security wins when people decide to wait.
And what if you wait and that person regrettably passes away? Does Social Security give you the money that you were out?
Nope. You get a check for $250. So I would take it and bank it even if you don't need it, because it's a form of a life insurance policy. You have it sitting in the bank if something happens to you before then. And we're going to go to Gene, who's also from North Carolina. Hey, Gene.
Hey, Chris and Tiffany, thanks for taking my call. I want to chime in about maybe the reason why the state of New York would give you a paper check for the rebate instead of giving you credit.
Yeah.
Yep.
How much is the usual rebate amount, just out of curiosity?
Like $450, $500.
Yeah, it can vary from $300 to $600.
Under $1,000, right?
Yep.
Imagine you're the state of New York or any company who's giving out money in paper checks for a couple $100, under $1,000.
Right.
A certain number of those will never be cashed.
That's true.
Yeah, you're right.
People will misplace them. And if it's only a couple $100, it's under $1,000, they won't report it and try and go through the hassle of getting it issued. So that money, until it's cashed, is never taken out of the bank account of
New York State.
Yep.
Yeah, that's a really good
And they're
point.
earning interest on it. And
now that my dental insurance, I have to pay up front, and they file my dentist files a claim, and I get a paper check from my dental insurance. If I don't cash that check, I don't get my money back.
That's right.
I was talking to a client the other day, and we did an amended return, and from the IRS he got a check for $5,000 when he was actually supposed to get a check for $2,500. So the IRS doubled what he was supposed to get, and so we called the IRS, and they actually reduced his tax and gave him the credit. And so they made a mistake, and so he's got this check sitting there on the counter.
What did they say?
They said to compose a letter. I composed a letter. The letter's been a few months. He still hasn't gotten his check. And we talked to another agent. They said to mail the check back. And so we're doing this dance. But you're right. Some people would give up, you know?
Especially when it's only a little bit amount. If it was a lot of money, I think there'd be a high percentage who wouldn't give up.
Right.
That's right.
Yeah.
That's right. And, say you never got the check and you forgot you were supposed to get the check, that
Go by and settle your mind. Yeah.
Yep.
Hey, thanks, guys.
Thanks,
Thank you,
good
Gene.
point.
Yep, that's awesome. Great call. Thank you. He's mentioned dentists. I know we wanted to mention HSAs today, and that's a health savings account for people who don't know what an HSA is, and it's different than an FSA, which is a flexible spending account. A flexible spending account, you put in X amount of dollars and you have to use that money by the end of the year. And if you don't use it, you lose it.
Right.
And it's very narrow scope of things that you can use that money for. An HSA is if you have a high deductible plan, you can then put into an HSA, which you can, and the money, say you can put in, I think it's $3,400 per an individual plan, $6,800 for a married couple. I may be off a couple bucks. Don't shoot me if I am. And the great part about that is if you don't use it, it rolls over year after year after year after year. And Tiff, what happens when you turn 65?
You can use the money and take it out.
Right. It becomes basically an IRA.
That's pretty cool.
So think about if you max out your 401k at work and you have a high deductible plan, you can put money in your HSA, and that's extra money you're putting away for your retirement.
Yep.
And we're putting up on our website. I know Tim, he's with a client today. There's the website is.
It's a guide of
HSA store, but it's a guide from A to Z with what you can use it for. And it's unbelievable. The list is astronomical. I mean, we would be here probably 3 hours reading everything.
You can use it for scales and like glucometers and
Yep.
some equipment.
Suntan lotion.
Oh.
I mean, I read suntan lotion. I'm like, what? They go, yeah, as long as it's 35 proof or better, you can use it. So, I mean, who would think lip bomb. I think of my daughter Gracie, who's addicted to this stuff.
It's in my car, it's in your car, it's in everybody's car.
Yeah, every room in the house.
Yes.
But I mean, it's just a wide range of things that you can use it for. I know some people say gym memberships. What I see here is you can't, but I mean, I would check with your HSA and double check, but we will post this up on our website and you can go through.
Another tool to put money in your pocket instead of the government's pocket.
Right. And we're going to head back to the phone and talk to Jerry. Hey, Jerry.
Hi. Thanks for your great program.
Thank you.
I'm going back to your discussion on LLCs. And isn't there one more advantage of an LLC, at least last year, because if it's profitable, you pay a little lower tax because of that tax credit?
Well, you pay, you get the QBI is what you're talking about. And that
qualified business deduction.
Yep. And that, right, if you're self-employed, an LLC, or even have a K-1 from a partnership or an S-Corp, that QBI does impact your tax return. It's a 20% deduction from your income off of the net profit. So if you made $50,000 net profit, you get a $10,000 subtraction after your standard deduction or itemized deduction.
But this is something that could be used, given to a LLC and an S Corp and a C Corp.
Partner, not a C Corp.
Not a C Corp, just an S Corp or an LLC.
Okay. Will that continue for 2019?
That will still be there. Yes, that's there. It's part of the Trump changes. So until that gets changed, that will be there. So it could be 5 more years. It could be 8 more years. Who knows?
And that's a really good point, Jerry, that you bring up. And also on Schedule E's, if you're in the business, if you're a landlord and that is truly your intent and that's your business and your way of making income, you would also get that potential 20% QBI for a Schedule E.
Oh, okay.
Yeah.
Well, now, it sounds like your program, you haven't always been keen about the Trump tax reduction, but I don't know. I see quite a few advantages for.
It's about it's about a third, a third. A third wins, a third stays the same, and a third loses. So it all depends on the individual. Single people seem to make out more than married couples. People with children under 16 make out. And higher income that way make out a little.
It's bad for people who are working on the road, salespeople, people who have to put a lot of money in to make their job go, like union people, construction people, nurses. So it's a third, and a third. So you raise a really good point.
Well, one of the things about single people being disadvantaged, so maybe it's a little bit of the old marriage tax advantage.
No, single people are advantaged.
They're better.
Better. Single people win.
Yeah, which it sort of goes against my grain of what I would like to see,
Okay. Thank you very much.
You're welcome.
And well, going off of that, part of it is the standard, you brought it up with itemized deductions. Single people, it's easier to itemize than married couples. Single people have a $12,000 standard deduction. Their property taxes, their local taxes, that whole section on your Schedule A is limited to $10,000.
Right.
How much is it for a married couple in that same section?
$24,000. Oh, in the same, it's also $10,000.
$10,000.
Yes.
So
I'm talking their standard.
Yeah, their standard deduction went up to $24,000. A single person is $12,000, but their property taxes, their state taxes paid, is only limited to $10,000. So if both spouses work and they have a modest home and their property taxes total and their taxes paid in total $13,000, they're only allowed a $10,000 write-off.
Yep. And then chiming back to what Jerry said, and sort of what you're saying, Chris, is another thing that makes me upset about the tax reform under Trump is that section that you talk about, that $10,000 section. It's capped at $10,000. So if your property taxes plus what you make, your income taxes from New York State, say you pay $6,000, but your property taxes are $6,000. That means your property taxes are limited by $4,000, and so you're shooting yourself in the foot, and you don't get to take $2,000 on the federal of your property taxes. And so for those states that you pay a lot of property tax, that's not a good thing.
Right. And, that's part of the thing, difference between the IRS and New York State. IRS is going by 18 laws. New York State's going by 17 laws. So New York State, you're still allowed to claim all your property taxes. We're going to take a short break. Call us at 803-0930, 803-0930, star 930 on your cell phone, and we're going to get to the text right after the break. I won't sing. My wife's shaking her head. Don't do it. Don't do it. So I won't sing. EG Tax here, final 10 minutes of the show. If you have questions, 803-0930, 803-0930, star 930 on your cell phone. And I heard Russ's commercial, and we are going to be at a seminar with Russ. Russ is holding a seminar in November. For real estate people. If you're interested in that, give us a call at 632-7886.
It's November 18th.
November 18th, or give Russ a call at 674-1500, and you can find out more information. But I know I had a client this week who came in consultation. He was selling a rental property that he had since 1972. And he goes, I was looking into the exchange, but it's going to cost me $10,000. I said, well, let's run the numbers. If he just sold it, it was going to cost him $40,000 in taxes. He goes, okay, I'm doing the exchange. Wow. So that's what that commercial means, how to help you avoid paying taxes by doing an exchange.
That's what it's all about.
Avoiding
paying more taxes. There's a texter. It says, do filers of Schedule C qualify for the QBI? Do you subtract the deductible portion of self-employment tax? Which is a really good question.
Right. So the QBI, how it works.
Qualified business.
Yep. It looks at your Schedule C. It looks at your bottom line first. So whatever your net profit is, so you take your gross, less all your cost of goods, and then all your million other expenses, your office and home, and there's your net profit. That's what the QBI is based on. So it doesn't reduce self-employment tax. It's what used to be called a page 2 deduction, but now with the lovely new tax forms.
They are switching them a little.
They are switching them again. It goes after your standard deduction. So again, if you made a $50,000 net profit, you get a $10,000 subtraction from income to save you on income tax, not your self-employment tax.
And so then, Chris, she also wants to know, where does, the self-employment tax, it doesn't, like you said, it doesn't touch the self-employment tax. And then what if this texter also had self-employed SEP? Where does that fall in?
That would be an adjustment to income if you put money away into a retirement plan, the SEP, a solo 401k.
Or health insurance.
Or for your health insurance, if that was your only way to get it, was out on your own. You do it right there under adjustments to income. And
I was going to also say, if you put money into an HSA, if you open up your checkbook, that HSA adjustment goes in that same world as does that health insurance for a self-employed person, or the self-employment deduction for the tax I paid.
Yep. But if you do it out of your paycheck, you automatically get it pre-tax. So don't take it twice on your tax return.
Right, I've seen
the
that.
government won't like it.
Right.
Well, they may, because then they'll send you a bill and you got to pay them extra money. So they may like it. It is trick or treat time, and that's a.
I also want to say we've been getting a lot of New York State letters for 2016. People often ask, why are the letters from so old? And Chris, you always answer this very well. New York State is behind in checking their paperwork, and 2016 is about to drop off. That means the statute is about to expire, so they are just about at the edge of when they can look at it. So I've been getting lots of people who are getting letters from New York State. A lot of them are 414Hs, and that's where people didn't add it back to their New York State return. And so they want you to make sure that you recoup and satisfy what you missed on your 16 return now.
Right.
So college, A lot of my people are getting New York State letters for college that they want them to prove that the
money was paid.
The money was paid.
And it's undergrad.
And that's exactly right. That's exactly right. But before you just pay it, let us know. I had somebody who got a letter from New York State over the week, and they wanted to prove it, so I had them get the billing statement, and New York State was wrong, and so you don't want to just pay it. You want to make sure that you verify it, right?
Right. We figure 60 to 70% of the letters are incorrect.
Yep.
So don't, because they're not going to, they say this is proposed changes, and people get scared and write a check. They're just throwing a figure out there to see if you'll bite.
That's right. And I also want to say that if you have an audit or an examination, don't go it alone. We go with you for free of charge. I can't tell you how many audits and examinations people go by themselves, and they really are doing themselves a disservice because you don't know the law and you miss things that are presented to you. Whereas if you had an advocate in your corner, you might be able to have a better outcome.
Right, because we know the laws, we know, and believe it or not, and if any are listening, auditors don't know all the tax laws.
Right.
They know how to check your figures. You took 1,000, here's your receipts. Oh, your receipts only total 500. You lose 500.
Right.
So call us first. Don't go in it alone. We did get another text. It says, is it possible to convert a 403B to an SEP IRA? Well, if you already have an SEP, yes, you could roll it right over into it as long as it was designed to take a rollover in. That's where you would have to check your guidelines to check. Normally you can, wait, a 403B is from New York State. I don't know if you can. It just hit me because there's only certain places that take them. And that would be a question for Mike or Glenn at the financial guys.
If they call us on Monday,
we'll conference the calls.
We'll do a conference call, 632-7886, because that's a really good question. Yeah.
Yep.
And then next week we're going to talk about the topic that we really didn't get to this week. And that topic is things that you can deduct on New York State that you really can't deduct on the federal. The Trump tax reform is good for another 4 years. 4 years. And so that's when it's set to expire unless there's a change in leadership, probably.
Right.
Yeah.
And so then it may change sooner.
Yeah. Any letters that you're seeing?
Just to be careful. It is. A lot of it right now is New York State letters trying to get those 16s in right away before April 15th. IRS letters, I'm still seeing some stock letters. You didn't claim all your stock transactions, or your 1095A, that, your health care mandate. This is a thing. People think, health insurance, I don't have to bail, because they got rid of the penalty for not having health insurance. Yes, they got rid of the penalty for not having health insurance. They did not get rid of you've got to do the reconciliation if you have health insurance through the marketplace.
Right.
So if you had a 1095A and you didn't record your subsidy, the government knows and you will get a bill.
Yeah. And then I hate to say we're talking about years dropping off. And so New York State and the IRS have, 2016 is about to drop off. It's also about to drop off for you people out there who haven't filed your 16 return, or if there's amendments that need to be made to your 2016 return. So I know I was helping somebody this week who didn't finish their 2016 return. And so you have to get those returns in if there's a refund. Otherwise, the statute of limitations says after April 15th, 2020, that money is gone and it goes to the taxing agencies, and you won't be able to recoup it.
They keep it
up. And there's a text. It says, "Thank the Lord that we don't pay a lot of taxes in New York State." Ha 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 is what it also says. And isn't that the truth?
Yeah.
We do. I guess whether I think they're joking.
Oh,
they're being
yes, yeah,
facetious.
yeah, yep.
And I think, going back to what Jerry said, that's what makes me most hurtful about the tax reform is that it limits the amount of property taxes that you can claim. And so I think that sort of goes against the grain because you're always taught about the fact that you want to be a homeowner, but yet you can't deduct all your property taxes. And so I guess that is my bent about the tax reform, Chris?
Yep. Right. Oh, it is ridiculous. And, we start talking about HSAs and aid. We're putting that thing up on our website. How about kids' training pants? You can use them for training diapers.
That's great.
Isn't that unbelievable? And that's take advantage of that.
Yeah, that was Esther's idea. Esther was
not having kids' training pants.
No, but she said, make sure that you talk about HSAs because there's so many advantages, and there's a wealth of things that you can do. And so
night mouth guards.
Yep.
I'm just going through this stuff here. Nursing services. Nutritionists.
You know what? I'm going to start this list for next week. It's what you can do to New York State, but not on the IRS. And some of that is moving expenses. So you can deduct that on New York State. If you're moving for a job, it's got to be more than 50 miles. Tuition and fee deduction, that's something that you cannot take on the federal return, but you can on New York State. Alimony for divorce after January 1st, 2019. Chris, talk about that a little bit.
Yeah, but those who have existing divorces out there, alimony contracts, before January 1st, 2019, if they went into effect, your alimony is still deductible on the federal and still counts as income for those receiving it on the federal. For those who just started divorces, finalized on January 1st, 2019, alimony is no longer a deduction on your tax return, and nor does it count as income for the recipient of it. So if you're going through a divorce now and you're looking to pay alimony, or they're telling you got to pay alimony, have them recalculate because you don't get the deduction anymore.
Yeah, and that's huge. That's huge. And so that means really more money for the IRS because
they're going after the higher taxpayer.
They're going after the higher taxpayer is what they're doing for that.
So Chris Fabian, Tiffany Fabian from EG Tax. We're here every Saturday from 3 to 4 on WBEN. Our tax school is starting soon. Next week, as a matter of fact. There's still room for you. Go to our website, egtax.com, or give us a call at 632-7886, and you can register that way. If you have questions, call us. Extensions are due October 15th. Your tax return is due. Give us a call during the week. Until next weekend, we will talk to you later.